embrace the new technology, because without that we'll develop solutions that actually in 2 years' time will already become obsolete.
Hello and welcome to the Bankers Masterclass series in association with Lloyds Bank on how the Payment Services Directive 2 will impact and transform the European payments landscape. My name is Joy McKnight, Transaction Banking and Technology Editor at The Banker. I'm joined by Steve Everett, Managing Director of Product and Propositions, Global Transaction Banking at Lloyds Bank. Thanks for joining me today, Steve. In the first part of this Masterclass series, we looked at the extended scope of the directive, and in part 2, we explored the innovation needed to successfully deliver on PSD2. In part 3, we're going to look at how the proposed move to immediate payments in Europe is encouraging a complete payment strategy rethink, particularly in light of the parallel changes happening around PSD2. So thanks so much for joining us, Steve. So what do you think are the main challenges today that banks face as they begin to revamp their strategy, their payment strategy?
Okay, I think that there are many challenges and many different questions that we need to ask ourselves. The first actually is who are we developing the payment strategy for? So at Lloyds Bank, we have a broad range of clients from retail customers through SMEs, mid-market, global corporates and financial institutions. And they all have different needs. And we need to understand what those needs are. Some would want 24/7, some want real time. When they look for real time, what do you mean by real time? It's not just making the payment, but it's the information flow that they need, particularly on the larger end of the client base, the global corporates and the financial institutions. We then need to think about, as the industry accepts immediate payments, how do we get banks to sign up? How do you get banks to want to invest and take their clients on that journey? Because it's not something that a small number of banks can do in isolation.
But there's the interoperability question as well, isn't there?
Absolutely. And we all have legacy systems. We all have core banking platforms. And how do you take the new technology and embrace that new technology that will be needed? Working in far different ways to developing payment solutions than we ever did, say, 10 years ago, but connecting that back into your core platforms, particularly when every bank will have a very large domestic offering, which will be the primary driver of the flow of payments that they put out into the marketplace.
But I think also the pace of change, the pace of innovation is really growing at an exponential rate. How can the banks really cope with that?
So we have to be very open-minded, we have to be very flexible in terms of the solutions that we create. We need to embrace the new technology, because without that we'll develop solutions that actually in 2 years' time will already become obsolete. So we need to have that flexibility in terms of our thinking.
Okay, and in terms of sort of your idea of the global footprint, obviously the immediate payments is happening in Europe, but it's also, there's movements in the US, movement in Canada as well.
It's interesting, isn't it? So we're all from the UK. We just take for granted faster payments. The fact that I can literally move money from an account in one bank in the UK as I do, and by the time I've logged on to my online banking channel, actually my mobile channel, by the time I've already logged on to check that money's there, it is already there. And we just take that for granted. And actually, I think there are now something like 18 markets doing different forms of instant payments. And only now 2 of the biggest markets, Europe and the US, are actually looking to embrace that. And once, if they don't fear the regulation, don't fear the regulatory change, actually embrace the change and the opportunities it can create, in 10 years' time we'll all globally just be embracing instant payments and actually being able to move money between different markets and different currencies instantaneously, rather than settlement taking place over many days, and actually also never knowing where the payment is at any point in time. I'll come back to this, real-time information that clients want. They want to know if they've sent money, it's reached Singapore, where you can immediately lock into the local faster payment scheme there, and the money can be in that account in minutes.
How do you see the future developing in terms of immediate payments?
Yeah, that's an interesting one. So at the moment, when we think about immediate payments, faster payments, it's very much the sender is initiating the transaction. In my case, it's me initiating that payment. I can see a place where you have the opposite, where you have the pull effect, where, for example, at the moment, you know, a large utility company in the UK will traditionally collect money from me through a direct debit. I can see them going in and doing effectively the opposite of a faster payment and pulling that money from my account, and then having immediate settlement, rather than wait again for, you know, a 2-3 day settlement process to deliver the funds, and therefore enabling them to unlock working capital.
Okay, but how do you see that the business case stacks up for the banks?
So if you look at the business case in isolation, you know, I don't think you can look at payments as a pure product offering, where you would charge and you know, you would generate revenues that would offset the cost of all of the investment that you need to make. You need to look at it as part of a broader solution. So whether that's you know, broader cash management and payment solution, where you're looking at pooling and sweeping, how do you use data? You know, how do you use data services and supply data services to your clients, and actually look at the broad proposition. And what we're looking to do at Lloyds is offering solutions rather than individual you know, product components. And that's very much putting the client at the heart of everything we're trying to do, the client-first approach that we have. That if you get that right, and you look at the overall business case, the business case I think stands up. There will be some hidden opportunities on the cost savings. So, for example, there are lots of legacy platforms around. If you can actually retire some of those platforms and embrace the new technology with the new payments, then actually your cost to run, your cost to deliver, your cost to serve become cheaper over time.